Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and joining my colleague Yatin, Mota. Yatin, so the cheer that we saw yesterday appeared to be quite short-lived because Nifty slipped over 100 points and broke below the 25,100 mark, and Sensex also stumbled about over 500 points. But yes, what weighed on the sentiment definitely were the IT stocks, down 2% on an index level. And we did see Infosys that didn't do well, and mid-cap IT names like Coforge and Persistent fell about 8 to 9% each. Now, Nifty, Realty and FMCG, they were the other sectoral drags. And what provided the comfort, that was the PSU banks that did well in the subdued market. So yet all in all, it was a weak markets. And given that weekly expiry, this was quite imminent as well.
Absolutely. I think the IT basket disappointed. I think in the heavyweights, Reliance also has seen a sell-off post the quarterly numbers. So overall, the heavyweights in the IT and, stocks like Reliance continue to drag the markets lower. In fact, SBI also dipped below that QIP price of 817. So the broad sense of the market was to defend the 25,000 mark. Broadly, we have been able to do that, but let's see after today's announcement of the India-UK FTA signing. Progress on the India-US trade deal is something that the markets will be watching out for keenly. Beg your pardon. And if you look at the advance decline ratio, also today was quite weak. Mid-cap saw some selling, and the advance decline ratio was almost 1:2. So 1 advance versus 2 declines.
That's right. The breadth of the markets was quite weak at this point. But yes, let's take a look at some of the gainers and movers on the Nifty 50 front. If you look at the top gainers, Eternal standing tall with about 4% gains. In just 4 days, the stock is already up about 21% itself on the back of its strong June quarter results as well. On the other hand, if we see Tata Motors also did well with about 1.5% gains. Second consecutive day of gains that they came in for Tata Motors too. Dr. Reddy's on the back of its Q1 results. We'll be discussing about the stock later in the segment in detail, but that stock did well with about 1.4% gains on the back of Q1 results. Grasim was another stock with about 1% gain. Cipla ahead of its Q1 numbers tomorrow, which is due for June quarter results. Cipla also did well with about 1% gains. However, on the way down, what did not do well in this market, that was your Nestle, seeing a cut of about 5%, where we saw that the Q1 net profit slipped about 13%, and that's why that weighed on the sentiment, and that's why we can see a negative sentiment playing out on the FMCG major. Other than that, Trent also with about 4% cut. Goldman Sachs has downgraded the counter, cut the target price, and that's why we can see Trent seeing a cut of about 4% or so. Shriram Finance ahead of its Q1 numbers, seeing a cut of about 3%. Other than that, like Yatin, you were mentioning about Reliance Industries as well. Today also the heavyweight index has seen a cut about 1.5%, and Tech Mahindra also seems to be not doing well. The rub-off is visible across the IT pack at this point. But yes, mid-cap and small-cap indices, both of them not much participation once again from the broader end of the market. Small caps definitely underperformed with a sharper cut of about 1%. But yes, coming to shakers and movers, Yatin, why don't you take us through that?
Yeah, so in the Nifty 500, we had Electra, Green Tech, and that electric bus maker shares surged nearly 16% in trade. Ipca Laboratories 5% higher. Canada Bank posted the numbers, moved 5.5%, and Vijaya Diagnostics also moving 10% in trade. What was not doing well is obviously post the market coupling news. IEX was down 30%. We'll talk about this stock in detail. And as Lovisha was mentioning, Persistent Systems and Coforge were the top losers. 10% lower for both of these stocks. If you talk about the other losers in trade, we had Latent View. That stock moved 4% lower. Trent 4% lower. MGL post cutting down the guidance, in the analyst conference call yesterday. That stock saw a 4% kind of a profit taking.
That's right. Now let's quickly break down some of the stocks that did grab limelight today and what actually led to the drag of the markets. We'll talk first about IT stocks because that's where the street was hoping some respite would be seen. But finer details, if we see, that showcase that eventually dragged the index down. Now, growth wasn't a problem in the IT stocks that reported the numbers, as it had beaten expectations, because for Infosys we saw about 2.6% growth. For Coforge it was 8%, Persistent 3.3%. The management commentary also across the board was quite strong. Even the fact that Coforge mentioned that the second half will be materially better than first half, and Persistent also aspiring for that $200 billion revenue top line, which was also intact. But why did the stocks correct? If you take Infosys for instance, now the upper end of the organic guidance was trimmed by 40 basis points. So basically the previous guidance was about 0 to 3%, and now it is 1 to 3%. So the upper end of the guidance, which is your 3%, remains intact, but the earlier guidance didn't include the acquisition benefit of 40 basis points, and the current guidance does include it. So 3 months back, the best case organic growth was 3%, and now currently it is at 2.6%, because the balance of it will be coming out from the acquisition. So in fact, the guidance on an absolute terms looks a little narrower, and that's why the stocks fell about 1% in today's trade. Now coming to Coforge, 3 factors that disappointed the street. One was margins, which remains unchanged at about 13.2% on a sequential basis, and the management guided for it to be around 14%. But even that 13.2% for this quarter that the company has seen included the one-offs. So if we exclude those one-offs, those margins are quite lower from the previous quarter itself. Apart from margins, the company also saw a negative free cash flow during the quarter and spent around $85 million in capex, of which $62 million was used to set up an AI data center. So yes, we can see plenty of things that actually did not play out well for Coforge stock as well, and that stock also fell nearly about 9% in today's trade. Coming to Persistent Systems, another mid-cap IT which reported its numbers, the street was disappointed by the wage hike deferral. Deal wins were not expanding because they remained flat during the quarter compared to the previous quarter as well. So Yatin, all in all, if we'll go into the finer details of these numbers, nothing to be excited about. And once again, IT sector looks quite bleak outlook for this fiscal.
Correct. Correct, and I think despite Infosys better than expectations in terms of number delivery, we had seen the management still indicating that the clients are still not confident. There is still overall uncertainty in the sector, starting with TCS, HCL Technologies, Wipro. I think most of the IT sector managements have acknowledged the fact that despite the deal wins moving higher, the execution is slower, and the client uncertainty over the ordering moving forward is something which will keep the overall guidances and the growth targets on toes. If you talk about Persistent and Coforge, these are the most expensive stock in the IT space, in that large cap, mid cap arena, and hence, despite a satisfactory performance, both of these stocks were down 8-10%. But today, Lovisha, IEX, because I just want to talk about the stock, one of the stocks which moved lower by nearly 30% in trade. Yes, you heard it correctly, 30% down for this stock, because the market regulator CERC has issued a notification in which they have approved the market coupling. Now, what is market coupling? Is that the exchanges which deal in electricity futures and day-ahead markets will have to come up with a single clearing price, and once the single clearing price is discovered across the exchanges, the bid ask remains the same, which means that IEX, which is currently the market leader in the electricity exchange or the energy exchanges, will have to face stiff competition. In fact, brokerages do believe that they will lose a significant amount of volumes and market share to other exchanges, since the clearing price is single. So, the traders or the electricity boards or the participants are not really concerned about which exchange to trade on, and hence IEX saw a deep cut in trade today. In fact, we have Bernstein, which has downgraded the stock. They have cut the target price to 122 versus the earlier target of 160. They believe that the transaction charges for the exchange will come down, the volumes will also come down, and the market share also will come down, impacting IEX volumes. UBS, however, they have still to review the target prices. They had an earlier buy rating on the counter, but they believe that the CRC implementation of market coupling, DAM, which is the day-ahead market phase 1 from January 2026, will be a key negative for the company, and hence we saw the stock nearly 30% lower, and probably brokerages like Bernstein do believe that from here also we could see a further downside.
All right, stock down about 30%, and further downside could be seen for IEX. That is the stock that we need to track going ahead. But now let's move on and talk about one stock that did well in this market. That was your Tata Consumer. That stock did well on the back of its Q1 performance. So we saw that the top line and bottom line saw about double-digit growth, but margins, that is where the company saw weakness. And our brokerages have shared quite a mixed response on Tata Consumer. While they appreciated the resilience that was seen in its core categories, for instance, your tea and salt, but they did flag concerns over its muted growth. For instance, in your newer businesses, and some margin volatility also they have flagged about. Morgan Stanley also described the first quarter results as quite mixed, and they noted that while the revenue rose about 10% year on year, it was 4% below what Morgan Stanley was estimating. However, EBITDA margins came in above their estimates, and that's why they expect the margins to improve by the third quarter itself. On the other hand, if you look at another brokerage firm, which is Citi, they termed the Q1 performance weak due to the 9% decline in EBITDA, and they noted that the growth was primarily driven by the core business in India, with double-digit pricing-led gains in the tea and salt business as well. So yes, core categories, that is where the street appreciated the counter's performance, and that's why we saw Nomura also giving out a buy call on the counter, and they gave it a target price of about 1,300 rupees per share, because they believe that the company's double-digit sales growth is quite a positive going ahead. So Yatin, now despite the stock gain today, but the management has hinted another quarter of margin pain. That could also limit the upside going ahead.
Correct. Yes, and the recovery for FMCG companies is to be watched out for. This time starting August end, we have the festive season which will start with Ganesh Chaturthi, then we have Diwali, Dussehra. So most of these FMCG and consumption names are expecting that at this time the good monsoon and the overall festive season will lead the recovery. So whether or not that recovery happens along with good margin growth is something we'll watch out for.
Yes, right. That is what we need to watch out for. But let's also talk about one pharma stock that did well today. Dr. Reddy's gaining about 1% or so despite a miss in the June quarter results. We did see that the revenue was up about 11% year on year. Profit was modestly up by nearly 2%. But despite today's gain, brokerages, they've remained quite pessimistic on the counter, because we saw that CLSA has maintained an underperform call on the counter, and they've given out a target price which implies a downside potential of about 10% from today. Now, what CLSA has noted that the underperformance from the US business is expected to continue and is likely to remain flattish, while other markets could see some steady growth. Now given that Revlimid patent is set to expire in 2026, so brokerages had been sharing cautious outlook going ahead earlier as well, and now also if you look at CLSA's note, they have been quite cautious, and other brokerages have been also quite cautious. Now CLSA also said that the sales of Revlimid are expected to taper off from the third quarter, and this vacuum can be filled by the launch of semaglutide in markets like Canada and India. So all focus is now on the launch of semaglutide drug, which is basically treats your type 2 diabetes. And Dr. Reddy's confirmed that plans to launch the product in Canada in July 2026, which is your next year itself. Now, Jefferies has also retained an underperform call, and they have given out a lower target price of about 1,100 rupees per share on the counter. So the rollouts for semaglutide drug is expected in 87 markets throughout your FY 26 to 27. The company has secured a pen capacity of about 10 to 12 million units via partners, but its own Vizag facility will come online in FY 28, a delay that could limit early upside too. So Yatin, all power rests on this semaglutide drug, and the company is also betting big on the drug after the Revlimid takes a backseat.
Absolutely, and I think these pharma companies typically have windfalls once one drug cycle continues, the other comes up for a blockbuster period. So yes, as you mentioned, Revlimid probably will give up gains in the second half as per the management commentary, but semaglutide and the weight loss drugs is something that will keep Indian pharma companies as well as Dr. Reddy's in focus.
That's right. All right. So that's all the stocks we have for today. So far this week, Nifty is still in the green. We'll watch out for more stock-specific action to continue because we are in the thick of the earnings season. Tomorrow we'll be having more results coming in from Cipla, Shriram Finance, Bank of Baroda. So all of these stocks we need to watch out for. But yes, let's see and whether or not this stock-specific action and of course the earnings reaction, how this way the market's going ahead and the final day into the trading week. But for now, it's a wrap from Yatin and me. Thank you for watching.